And thank you to the audience. Thank you to the Aspen Institute for hosting us today. We spent a couple of very productive days at the Aspen Economic Strategy Group on the theme of building a more resilient economy. And the concept of resilience is very important right now. Most of us, anybody who's had children, know what we mean by resilience. You don't try and prevent your children from falling down or ever encountering hardship. You try to train them to bounce back and thrive. And that is an important theme for our economy because, my goodness, we've had a lot of things to bounce back from in the last few years, starting 3 years ago with this devastating pandemic, and a economic crisis to boot, and we were barely struggling our way out of that when we were hit with Russia's invasion of Ukraine, supply chain problems, epic inflation, rapidly rising interest rates, a severe inflation problem, and now then earlier this year, a banking crisis. And so economists have been saying for the last year that we were likely going to have a recession. Just this past week, Fitch downgraded the credit rating of the United States, saying that our governance problems and our debt problems were really, really not headed for a solution. And so that's obviously quite the plate of stuff for us to fix today, right? And I think what we want to talk about is, well, what's the way forward? How do we look like after all those various shocks? But more importantly, how do we make sure that this country and we as a society thrive and are resilient in the face of those things? Resilient as a society, resilient as a political system, resilient as human beings, workers, managers, and employees. So let's first start with the framing of where we are. And Cecilia, I want to start with you because you're chair of the Council of Economic Advisors, which meant that basically you owned the economy for better or worse for 2 years, okay? And I know that you don't any longer have to stay, hang there in anxiety about the morning payroll report. Nonetheless, we got the payroll report today, 187,000 jobs, a cooling from previous months, but good by most standards, and the unemployment rate's still at 3.5%. So what's your assessment of where we are right now in the economy? Are we solving the inflation problem? Are we going to scrape by without a recession? What do you think?
So thank you. So one of the things that I was known for saying at the Council of Economic Advisors is that it's very, very difficult to forecast, and we should all be rather humble in the face of the data. But what I would say is that this economy, to overuse a word for this session, is remarkably resilient. And as you pointed out, the employment report today suggested that we have some cooling in employment, which is appropriate, was welcome, because we could not be sustaining, it's just not even possible to sustain monthly employment growth of 300,000 jobs. Whereas if we were really normalized to regular, have a healthy economy with typical turnover, we would have employment growth that was more like 100,000 jobs a month, plus or minus. So what we see is we've seen some cooling in terms of employment growth expected. I think the Fed will very much welcome that. The unemployment rate actually ticked down slightly to 3.5%, which is very low. With an employment rate of 3.5%, you wouldn't expect employment growth of even 187,000. And so all of that suggests a very resilient economy. Other signs of cooling, we had job openings data earlier this week. Job openings came down slightly. They're still strong. We still have a strong labor market. Unemployment insurance claims remain low. At the same time, we had the first estimate of GDP for the second quarter. Came in a little better than expectations. I think it was 2.4%. That will be revised. We will see where that came, largely supported by consumer spending. So consumers are spending, which is a good part of our GDP and our economic activity. So our economy is really hanging in there very well, even as we see inflation having come down quite substantially over the past year. So, it's very possible. What we've seen is that the easy part of the easing of inflation, we're working our way through. That was the easing of supply chains, which there's a lot of data. Our supply chains have gotten a lot more fluid since the dark days of the pandemic. We also expect that in terms of housing, that lags in the way that we measure in inflation, that the contemporaneous signs look like that is cooling as well. That said, I think we've always expected the last couple of parts or last percentage points would be the toughest to achieve. I think the Fed Reserve is also going to not be complacent. They often strip out the volatile oil or gas and food. We know gas prices have been creeping upwards. Food, I think there's some signs that that's creeping upwards as well. Russia's not cooperating on the blockade of grain leaving Ukraine is not going to help there. So there's a lot of reason to be vigilant. There's a lot of reasons for optimism. This economy looks like, it's possible we will achieve this soft landing, softish landing that the Federal Reserve is trying to, is aiming for. But what I would argue is that and I think what many people are anticipating is it's the last little bit may be more difficult to achieve than the first cooling of inflation. But on the whole, this has been a remarkably resilient economy.
Adena, you run the stock market, the Nasdaq stock market, an area of great interest to many investors, possibly too much interest sometimes. And it's had a great run. You're up like 40% this year, I think, So I think I'm safe to say that your market is betting on the soft landing outcome. What do you think? Is that sustainable, or just to be, like putting on my stock market reporter hat, is it a bubble?
Yeah. Okay, so I think we have to frame out the performance of the stock market in a couple ways. First, we always have to remember that the market is a predictor of the future. So what investors try to do is predict the future of the economy, the future of a sector, a company. And so that all manifests itself in the markets. The second thing you have to look at is history. So what's happened over economic cycles in the past? And I have data that kind of looks at the S&P 500, and then we'll talk about the Nasdaq 100 because it's got a little bit of a different dynamic. But there are, Goldman has actually put together this really interesting report that looks at 4 stages of an economic cycle. And the first starting with despair. Right, so the economy's in decline, and everyone's really morose and very, very pessimistic. And what you actually find is that earnings stay relatively flat, but the market, the PE multiples, they compress, and they can compress by about 35%. And that drives market performance down about 35%. Well, if you look at 2022, I think we could all say, and that usually, by the way, lasts about 14 months. Well, you could argue that 2022 was the year of despair. And then the next part of the cycle, and this is many cycles that they put together, is the period of hope. And in the period of hope, actually, earnings decline, but everyone's expecting the world to get better. And so PE multiples go up about 80% on average. And so the market ends up about 60%, because you've got declining earnings but growing multiples. And what you actually look at so far this year on a relative basis is last year the markets were down 25% rather than 35% of average. This year the markets are up 35%, that's S&P 500, versus this 80%, right? So you could argue that there's more to run in terms of that period of hope. And then you've got this 3 to 4 year period of growth. And in that period of time, earnings tend to go up around 7.5 to 10%. The market PEs actually decline a little bit. And so the market actually tends to be relatively flat, interestingly. And then you've got the last period, which is the period of optimism, where everyone is just hoping that the period will continue. And it usually lasts about 2 years, where PE multiples go up again and earnings start to come down. They're still growing, but not as high. And so it's a really interesting way to frame out where we are. So markets were down about 25% last year. Markets are up 35% this year. If we're a normal cycle, you could argue that there's more to go, and then you get into this period of sustained growth if we can avoid a recession. And what's also interesting is last year, earnings were actually up a little bit. This year, earnings are down, but not as much. So and then you layer on the Nasdaq 100. So why is the Nasdaq 100 outperforming the general market? And I think that's when you get to more of a sector view. And while the S&P 500 has all the great tech companies in it, the Nasdaq 100 has more of a concentration of the tech companies. And that, to me, the market was down 40% last year, I think, and up about down 35% last year, up 40% this year so far. I think that has more to do with an optimism about the future of technology. And the fact that I think it also a recognition that technology is driving the economy. And so as we are in this period of hope, you might have more hope on that sector than you might have in other parts of the economy. So that's my explanation. And so if I were to say, what do I think will happen? I do actually think we have a real chance of a soft landing. I do think that technology could have a significant impact on the productivity of the country over the future, which will then drive more growth. And so if we can land the ship well right now, I think we could have a really good run and continue growth in the economy.
Well, just to put you on the spot, do you think the Fed has stopped raising interest rates? And does this outlook of yours depend on the Fed having stopped raising?
I actually happen to be on the board of the New York Fed, so I have to, so I can't answer that question. But
just not speaking on behalf of the Fed.
yeah, so I can speak on behalf of NASDAQ. I'll speak on behalf of, or on behalf of Adena Friedman. I actually would say that I think that we are certainly near peak rates, if not at peak rates. And what they're really looking for is, a continuation of the trend on downward inflation. Some, change. I think they'd be thrilled if they could continue to see this kind of job growth while inflation continues to decline. Obviously, wage growth is one of the biggest determinants of that. And so I'm hopeful that we are at a position where we don't have a rebound, because that's the big concern right now,
a rebound
in inflation.
Yep.
So assuming we don't start to see a rebound in inflation, I actually think we could be at, or at least I think at, but maybe near peak rates.
Rob, I want to bring you into this discussion, and particularly by looking beyond the shores of the United States. A lot of the shocks we've been through in the last few years originated abroad, whether it was COVID in China a few years ago or the invasion of Ukraine last year and the consequences for commodity prices. And I think when I do my reporting, that one of the concerns hanging over people is that things are going to get really bad on the global front. You hear a lot of talk about decoupling, de-risking, deglobalization, economic Cold War between the U.S. and China. If it's not a balloon this week, flying over us, it's like they're opening a new base in Cuba, or they're hacking us. And I think that it's fair to say that the global environment, and we heard this in our discussions this week, is more fraught than we've seen in a long time. What do you think? How concerned are you about a period of sustained instability in China-U.S. relations? And, what's the outlook for the global economy in that context?
Yeah, great questions. First of all, thanks to the Aspen Institute for allowing us to be here again this year. And I think both Adena and Cecilia very well summarized kind of what we heard, which is relative optimism, and that the economy is remarkably resilient given all of the shocks, including our relationship with China. You talk about decoupling, the other word is de-risking, and for those of you who follow this closely, it kind of depends what you're talking about. Gwyneth Paltrow once famously said about her divorce, it was a conscious uncoupling. I hope we're not getting divorced from China, because that probably is not a good idea for our economy. But I'm going to plagiarize from her a little bit and suggest that the best way to go forward is conscious, strategic de-risking. What do I mean by that? And I think that's what's happening. The private sector is beginning to sometimes friend source, in other words, go to other countries that are more friendly to us. That would include Vietnam or Indonesia or Thailand or Mexico, for that matter. And so they are kind of de-risking by not being so dependent on China, as we saw during the pandemic. That has its negative consequences. But the question is, what is strategic and what is not? And this is where, going back to the famous actress again, you need to be conscious about this. So as we are determining how we deal with China, I think we have to be careful to divide what is truly a national security risk, as an example, or perhaps some strategic economic risks, like artificial intelligence, as an example, or maybe quantum computing, and kind of everything else, where we actually have a very healthy trade relationship with China. Actually, last year, China sent us more exports than ever. It was actually a record year. This year, it won't be, I don't believe. Some people think, let's just cut off entirely from China, and why not? So I brought this with me, which is the Aspen Economic Strategy Group water bottle, which all of us received. That's where it's made. So if we're going to cut off water bottles and toys, it will have an impact on the cost of products that people find at Walmart, and those are not strategic. On the other hand, again, I think we, over the years, over the last couple of decades in particular, we kind of ignored the threat from China, including the theft of our intellectual property, which helped to grow the economy, but also the rise of their military. We kind of ignored some of the human rights concerns with the Uyghurs and others. We kind of ignored some of the trade imbalances because China, as you know, is not a market economy, and they have more and more state-owned enterprises actually now. For a while, they pushed economic reforms, and there were fewer, now there are more. And they subsidize heavily and sometimes sell below their costs, which is dumping. And that's not fair to American workers or to workers around the world. So, we have to deal with these issues. And that doesn't even get into the issue of Taiwan and what's going on there, or what's happened in Hong Kong, or other issues like the military aggression we see in the South China Sea that worries so many of their regional neighbors. So I think there has to be a balance here where, given our engagement with China, which is significant, again, the water bottle example, and so many other products, that we continue to have a healthy trade relationship, put it on a more level playing field so that they're not subsidizing unfairly or otherwise not following the rules of international trade. But then with regard to these products or services that are of a strategic interest to us, I think we have to go in with our eyes open, and we have to come up with a way to determine what is strategic and what is not. That's not easy. So you might think a toy or a water bottle, that's easy. Dual use military commercial technology that would help their military, that's easy. That should be in the category of us de-risking from that. But how about robotics? Or how about farm machinery? Where does that land? So these are all challenges that we talked a lot about these last couple of days. And frankly, some of the smartest economists in the country are there, not including me, but including these two. And we didn't have any answers. So when you get down to it, in my view, we need to have an engagement with China. We need to have dialogue with China. They are the second largest economy in the world, likely to become the largest economy in the world in the next couple of decades. And we need to have a healthy relationship. But we also need, again, to do so without naivete. We need to know, that what we're doing is actually helping to deal with some of the issues that we talked about earlier. So I'm hopeful that with the increased dialogue we've seen just in the last couple of months, that we can get back on a more normal track here, but at the same time, again, have a conscious, strategic de-risking. And again, the private sector is doing a lot of that on its own, but some of it, government will have to play a role in terms of some of these truly strategic goods and technologies.
I want to stick with you for a second, Rob, because you talked about steps that we need to take to de-risk. And one of the new phrases you hear a lot these days is industrial policy. Now, like Japan and Western Europe used to do industrial policy, which shorthand for which is that we're going to choose which industries we think are strategic, and we're going to put government resources into those, subsidies, tax breaks, protection. Traditionally, we didn't do a lot of that here in the United States, but now we're starting to do it. We passed the Chips and Science Act, which includes $39 billion to build semiconductor fabrication plants in the United States. But you also hear talk about, well, we need to go much further beyond that. Electric vehicles, renewable technology. I've heard people say we need a CHIPS Act for steel and for aluminum and for all sorts of other things. What is your view? Is industrial policy a good thing or a bad thing? Are we doing the right amount? Are we doing too much?
Again, it depends how you describe it. In general, I think we need to be very cautious. The government does not typically make good decisions in terms of what the greatest and best technology might be. And we see plenty of examples of that around the world, as you say. I even think China right now is suffering from that. They're a non-market economy. We understand that. They've done extremely well over the last couple decades since getting into the WTO and since China permanent trade relationship. But they've also made a lot of wrong decisions. And right now I think they're suffering from some of that. So I think we have to be very cautious. On the other hand, getting back to the earlier discussion, if something is really of strategic value to us, I think we have to be willing to take some steps to be able to ensure that the United States has the ability to have a supply chain either from a friendly country or be able to depend on our own production. The classic example would be chips, and you mentioned it. So a lot of you know that this legislation was passed on a bipartisan basis, and the effort was to try to bring back really some of the manufacturing that we had at one time. We came up with this technology, after all, in the Silicon Valley. This was ours, and 30 years ago we had, probably 35-36% of the market. As of now, we have about 12% of the chips that are made here in the United States. And remember, these are for both the F-150 pickup truck and the F-35, fifth generation fighter. And without having access to those chips, those of you who waited in line for an F-150, you know what I'm talking about. The new electric F-150 is great, but if you don't have the chips for it, it doesn't work. So I do think in this case, we had an extreme example where the rest of the world was not playing by the free market rules. So there was subsidization, and there continues to be in China, of course, but also Taiwan, also South Korea, also Japan, some of our allies. And the question was, should we bring at least some of that manufacturing back? And that process has now begun. There are plants being built here in the United States, both by foreign entities, including money from South Korea, from Taiwan, probably from Japan soon, but also Intel, as an example, is building a big facility in a state that I'm very fond of, Ohio. And that probably influenced my decision on this a little bit, because it is really exciting. We're bringing back high-tech manufacturing and something that is absolutely essential for our economy, and it has great strategic value. So we're not going to bring back enough to say that America can be totally dependent on its own production. That's not going to happen, not in our lifetimes. But we are going to bring back enough, particularly at the high end. 90% of the high-end chips are made in Taiwan, 90%. And I mentioned the F-35, Taiwan, and think of the unfortunate but vulnerable position they're in right now. And I don't think it's wise for us to depend on that particular supply chain, given the obvious stresses that Taiwan is under with regard to China. So that's an example of where I do think industrial policy, you can call it that. You can call it simply understanding the reality of the world, which is other countries aren't playing the same rules we are. So we're going to have to subsidize in order to be able to have a secure supply chain.
So Cecilia, I and other journalists have taken to referring to the president's embrace of industrial policy as Bidenomics, to which the president, and I quote, said, "I don't know what the hell Bidenomics is, but it's working." Well, I want to ask you, is it like, you heard Rob just talk about where he saw like the need for industrial policy for strategic purposes. But if I may, I think that the president sees it in much broader terms. He thinks there are more industries eligible for industrial policy. He's talked about renewable energy. He said, when I think of green energy, I think of jobs, that sort of thing, right? He wants everything that's funded with federal money to be made in America. And I think that it's fair to say that the administration has also seen industrial policy as a way to address historic regional and other types of inequities in the country. But I know there are people who are uneasy with that. Talk to us, if you could, about what the benefits and risks are of this more expansive definition of industrial policy.
Sure, thanks. So first of all, I do believe that, as Rob just said, that there are places where, one, we've been behind the rest of the world in terms of doing some industrial policy, and especially when there's a national security need. But I think that there are other reasons why we might want to be doing more industrial policy than we have historically. I want to say one thing about the government and the public sector. I think I for one, believe very strongly in the private sector. The private sector, the idea that a single central planner has all of the information and is going to get it all right. But let's not over-torque on, the private sector makes mistakes too. And we saw that during the pandemic when auto industry, they just shut down, and the rental cars, they liquidated their fleets, which generated some of the pressure in the used car market actually coming out of the pandemic because they weren't far-sighted enough. Or if we go back to supply chains, it's very interesting how our supply chains are so complicated that a lot of the auto in the auto industry, they actually do not have full visibility into their supply chains. So the Commerce Department was actually convening the auto industry and trying to help facilitate that information. And I kept saying, what's the role for government here? Don't they have an incentive to understand their supply chains? You would think that, this is within their business. But they did not have full information. Some of it's for lack of trust up and down, because the suppliers don't want to give away too much information because they're working with multiple auto, companies or whatever it might be. And so those supply chains are so complicated that there actually is a need there can be a role for government in actually helping the private sector work better. So I don't think we should throw the baby out with the bathwater. But going to the broader, more expansive industrial policy, so coming out of this convening, there will be a volume, and one of the papers in the volume is a very interesting paper by a professor at the University of Pennsylvania named Han Mingfang, and it's on China. But one of the observations that he makes, and he says this is his interpretation of the data from Japan and China, where there has been more industrial policy, is that industrial policy can be quite effective when you're trying to catch up, which is where I would argue in terms of chips we're actually trying to get back. And I might argue even in terms of the EV market, that maybe we're behind, we need to do some catch up. But it's not as in his observation, it hasn't been as effective if you're trying to push forward on the frontier. So I think there may be a role now because the private sector, especially like dealing with something as existential as climate change, the private sector eventually get it there. There are many, social benefits that maybe won't be internalized by the private sector. But let's stipulate that eventually we get there, but not very quickly, right? The market signals, the price signals, we haven't gotten all of the information there. There could be a role, and part of what Bidenomics is about is trying to speed along our investments in green energy so that we can make progress much more quickly in making that transition. In addition, this administration believes, and I believe this myself, I think, we had a very lively discussion about this question. We have followed a very, but we've had an open free trade economic policy. I'm an economist, I'm a PhD economist. Please don't make me give back my PhD over what I'm about to say, is my profession has very much emphasized the benefits of economic efficiency. And so many of us would completely agree that open trade and a lot of technological advances, all of that is very good. It increases the size of the pie. But what it is a little much lighter on is equity. And some of us are very concerned that, and it's been documented from economist at MIT, David Otter, that, for example, the accession of China to the WTO and trade with China we've all benefited in the lower prices, and we have so many of these. I'm not sure whether actually the last one is so valuable in my household, but we've benefited in terms of lower prices, but the costs have been not borne as equally, and there are parts of our country and there are parts of our population that have severely borne the cost. I have colleagues, Ann Case and Angus Deaton, who documented the deaths of despair. They have tied that to some of this unequal costs of this trade. And so through this industrial policy, if we can right some of that as well, by trying to be strategic in where some of these investments are made, if we can bring jobs back or revitalize some communities or help those who've been left behind benefit more from this economic activity, that may help us have a healthier economy in the sense of there may be some cost in terms of pure economic efficiency, but if we have some gains in terms of equity, maybe that'll help with, the polarization that we're having in this country, and helping for having a more sustainable economy going forward. These are questions. I put myself in the category of industrial policy can go very wrong. I'm not going to argue that the public sector and all the government officials have all of the right information or are going to get exactly right. But what I would argue is it's not obvious to me that doing everything decentralized and having government completely out of it has gotten it right either. And let's try. Let's be very vigilant in how we try, which is what the president is doing. He's got these people who are really trying to ensure that implementation is going well. But let's try to learn from it so that we can learn the best of when is it appropriate for the government to do a little bit more direction through subsidies, through tax credits, or however it might be trying to nudge things in which direction. When does that go well? When does it not go well? When does the government need to get out of the way? But I think it's a moment to actually learn something so that we can have a society that is actually healthier going forward.
Adena, Rob mentioned one of the areas of strategic competition where the United States has an interest in being in front is artificial intelligence. Now, judging from the performance of some of the stocks on your market, like NVIDIA and so forth, we think we're in the lead already. And, you know, we heard a lot about that over the last few days, and you can just pick up the Wall Street Journal today or like call it up on your phone app, and you'll see an article about AI. And I think that these stories fall into one of two categories. AI is so amazing it's going to take over the world and eventually like become our masters and kill us all off. Or it's a total hype and it's going to collapse in a bubble just like all the excitement over cryptocurrency. So those are your two choices. Which is it? What's the you can offer it. You can take the middle option.
I'll take a middle option.
What's the real story with AI as you see it?
Yeah, I mean, well, first of all, I do indeed believe that the current generation, the next generation of AI, so that's large language models, generative AI, in addition to the deep learning Bayesian models and other AI that's been in the market for a while, is truly disruptive. It's also a revolutionary type of technology. And I would certainly say on the generative AI side, you're seeing kind of, I always say there's evolutionary technology and there's revolutionary technology. And I would put the Gen AI more in the revolutionary technologies end of the spectrum. And the reason is because it is learning so fast. And we've actually spent some time on this morning, but the level of development is so quick now. And you've gotten to the point where the level of sophistication of its ability to learn is so intricate that it's starting to actually, act like a brain to some degree. And so I think that at that time, if you're kind of starting to say, is it truly predictive? Predictive modeling, yes. Language modeling, large language models that can predict the next word, write it in an eloquent sentence, being able to, kind of reason and use logic to come to a conclusion. It's quite remarkable. And when you think about the use cases for that, just in the private sector, you can imagine so many use cases. Like the first day that we did an offsite at Nasdaq and said, well, how could we use this technology inside of Nasdaq? Either in the business, like in our products that we deliver to our clients, because we actually do provide a lot of technology beyond our markets, or on the business to make our business more effective and efficient. We came up with 25 different use cases in an hour, right? So, and I think every company's been doing that. So the level of pervasiveness that this technology could have in creating much more efficiency within an organization, much more productivity, better outcomes for clients, better outcomes for, in our case, we use it for anti-financial crime. So better ability to fight crime, make that process more efficient and effective. There's lots of positives. And I think it is just beginning to surface. So like NVIDIA, AWS, Azure, OpenAI, those, Anthropic, those types of companies, they are the foundational technologies that will drive adoption. But what we haven't yet seen is the market really think about how will it be adopted, and therefore which companies are going to be able to get ahead faster, which companies are going to be more efficient, what new companies could come out into the market, what new technologies could be born out of this, lower the barrier to entry to new innovation, things like that. That actually hasn't yet really filtered into the market. So in my opinion, I think there's a lot more to learn and a lot more to see, but you could continue to see productivity go up, which means growth goes up, which means the markets go up. Now, that's the positive side of AI. There's a very large and concerning side of AI as well. And I think that we have to recognize that the technology does not have an intent. The technology itself is not a person, but it's how people use it that determines intent. And there are people, like I would like to think Nasdaq, has a positive intent for the purpose and use of AI. We can do things to make the financial system safer. But there are people out there who are going to use it for the opposite intent. And what we have to start to figure out very quickly, and it's very difficult to do because the technology is happening and evolving so quickly, is how do you put smart regulation in place? How do you have a public-private partnership that tries to figure out how this technology can be used in these use cases openly? It might have some restrictions in the use cases here, and might be prohibited in the use cases here. And that is a hard thing to do because it's going to involve the Commerce Department and NIST, which I think is a great place for it, and we talked last night about the fact that's a very good place for it to start, but you're going to have to look at it in the Defense Department, you're going to have to look at it in the Transportation Department, you're going to have to look at it in every single part of government. It's got to engage with industry, and obviously the SEC and the feds, to figure out how this can be used the right way, and try to figure out how to make it so that it doesn't get used the wrong way. that is very hard to do. But that's, I think, that the big dilemma that we're all facing now. And what's good is you're seeing those foundational companies engaging with the White House, right? That came out with a set of principles. How you implement that is going to be the big challenge. But at least it sets up some principles for us to start with the regulators on.
So Cecilia, I come to this AI debate with a little bit of a history here. I've been hearing about the robot apocalypse for decades now, and writing columns about how that's all a crock. Spreadsheets came along and we lost bookkeepers, but we created like financial analysts and other things. So the story I would always tell was that technological disruption has been a constant for hundreds of years. It's always created more jobs than it costs and made us richer. Then last fall, OpenAI came along, and I noticed that it could actually write articles.
Got personal.
Better than I could. And so my take on this was, well, technological disruption is when your neighbor loses their job to technology. The robot apocalypse is when I lose my job to technology. But, all joking aside, like, what impact will AI have on us as human beings and as workers? Will it wipe out jobs? Will it displace jobs? Which jobs will it displace, and how should we respond?
So I think that is, at least in my camp, that is what everybody is very concerned about. And I don't think we have all the answers. We certainly can see that, for many occupations, white-collar occupations, service occupations, which traditionally were shielded from other kinds of technological change, which was more on the mechanical side, robotic side, that these large language models that generative AI can replace particular tasks within an occupation, but they're not yet replacing wholesale jobs. It's a matter of time before there are wholesale jobs, or if you can have, 25% of 4 people is done by the generative AI, you don't need the 4th person over time, right? So there can be some attrition in terms of the labor demand, because there's using some capital for labor, as we would say in my business. So I think the question is, to what extent is this new technology complementary with labor? So does it help make workers more productive versus is it substituting for labor? I agree with you. Over the long haul, we will see our economy, the Gutenberg Press, we had the Gutenberg Press, we were an agricultural economy, we were, more manufacturing, now we have more service. That's one of the great things about our economy, is adaptable and it will transform. The question is, what happens in the short term? So what happens to livelihoods, who's affected in the short term, and then how do we make that transition to the longer term? I'm fascinated by the Hollywood screenwriter strike. I think that is, the first of many. It's traditional for labor unions to be concerned about new technology and to try to write contracts to make it that they're preserving their workers and their members, while trying to recognize that the new technologies are coming. It's here in terms of Hollywood, and how do we negotiate that? It's a real question of in my business, how do you divide up the rent? So there's going to be benefits from technology. How do we divide up who benefits from that? But I do expect there to be I personally expect there to be some job loss, especially in the short term. That said,
Can I ask you, how do you define short term?
As we economists, in the long term, everything
I know,
is...
everything's more kind of long term.
Exactly.
How do you define short term
So
in that context?
I'm waving my hands.
Two-handed economist.
5-10 years, right? Something like that. At the same time, we have a demographic shift in this country where we know our population is aging, our fertility rates are low. It means the number of working age adults as a proportion of the population will be shrinking. Causes a problem for how do we fund Social Security? How do we generate the kind of economic productivity growth that we need in order to have increasing prosperity? This kind of technological change can be part of the way that we adapt to the changing demographic
Can I give you a couple
reality.
other thoughts? I mean, so I agree. I don't disagree with what you said, because I think that there are going to be certain jobs that are displaced. There could be certain jobs that are replaced, and then there's certain jobs that are created. Yep. I think this notion, though, that productivity gains could be significant, and I think that's an important thing for us to really start to study. I don't think that's really been studied yet. And so it's so new. I would love to have a formulated study on that, because let's just say that you get a 1 percentage point lift in productivity for the next 20 to 30 years. And we talked about this last night. Let's just say it's a 20, 30-year improvement. And you've got a much lower barrier to entry to innovation, because especially software innovation. Coding is going to become a lot more efficient. And we always, I mean, one of the jobs that is the hardest to find in the world is engineering, software engineering. So if we can make that more accessible, make that more available, and make it so that we already do weekly release cycles, monthly, quarterly release cycles, right? If we can have even faster release cycles and more capabilities come out, it'll allow new companies to form faster, go to market faster, compete faster, and innovate faster. And I think that is a really interesting way to think about a different kind of job creation in terms of the entrepreneurial ecosystem. But it will require a different skill set, and so that's where we've talked about, our country's not great at adapting to the need for new skills. No country is.
It takes time.
It takes time. And so that's where I think that short-term, long-term, and I would put 5 versus 10, but, and then looking at how this actually kind of creates an amplification over the 5 to 15-year period of time, I think that's a real possibility. So I didn't mean to interrupt. But
But I think that's very much what I was...
Rob, I can see you want to
No,
weigh in.
a couple of thoughts. One, I've become convinced in the last couple of days talking to people, and I already went into this with a bias, I admit, that I think it's already making a difference. I mean, I think it's already making a difference in industry, some more than others, and as you say, where the financial industry might benefit from more quickly, the manufacturing sector is catching up. A company shared with me that they're using AI for internal skills placement. So, you've got a company of tens of thousands of people, and you're trying to get the right person in the right job at the right time, and you've got an HR department to do that. AI gives you this enormous advantage to be able to, come up with a database about all of you and figure out who should be where and when. You shouldn't be sitting there, you should be sitting over here. And that's incredibly efficient, and it's about helping people achieve their human potential. So I think it's already happening, and I think that's one reason you see this resilience in the economy that, frankly, has left a lot of economists scratching their head. I will say, half the economists who were at this event last year, because I was there, were very concerned about inflation, understandably, and talking about what was going to happen. And I don't think any of them would have said it wasn't more likely than not that we would be in a recession right now, or by now, that we would have experienced one. So I think it's already making a difference. Now, I do think it's a great example we talked about earlier, where the private sector, this wasn't government, this was the private sector, being innovative, and we heard from some of those people the last couple of days. What I think we haven't talked about as much today is sort of the potential downsides and what is the role of government. And government has to be careful not to stifle this, and we're in an international competition. We talked about China earlier, but that's certainly true. But think about it in another way. If there's nobody sort of auditing it, it could both kind of go out of control and have negative impacts on our economy ultimately, and on individuals. And think of the bias or the discrimination that could be in AI as an example. Speaking to a former dean here, maybe a current dean, soon to be a president of Brookings, in the application process. Schools are turning to AI. Somebody came up with this database. The algorithm that's being used to determine whether it's going to be you or whether it's going to be you has got certain sort of built-in biases to it, right? And you have to be careful, I think, to have some way to audit that and to verify that this AI is working properly. And that's where Adena mentioned NIST. That's an organization at the Department of Commerce that I believe has the expertise to be able to handle this better than any other single organization. They don't have the funding, they don't have the expertise right now. And so my view is Congress should act to help NIST to be able to play part of that role.
So I want to go to questions soon, but before we do, something we heard a lot about this week, and it ties in very closely, is the question of governmental resources, okay? And one of the most striking charts that I saw was from our director, Melissa Kearney, superb economist, terrific director of the program as well. And she basically showed how we allocate resources between the old and the young. And the imbalance is really amazing. We spend magnitudes more money per elderly person than we do on young person. But the returns to the young people are so much greater, which stands to reason because they have so many more years ahead of this. And we're now kind of in this cage match. I mean, this week Fitch downgraded the United States credit rating because our debts are very large and our political system doesn't seem to be well set up to deal with that. I'm going to start with you, Cecilia. Is that a problem, and how do we fix that? It feels to me like addressing the resource issue for young people to adjust to all these challenges is really important, but it's very difficult to do when all these other things are crowding in and the deficit's so large. I bring that up just because in the context of resilience, this seems like really kind of like first order.
Yeah, this was we started off our discussions.
Yeah,
with
yeah,
these
we kind of
data
like came full circle, yeah.
The concern about the growing debt load in the United States, and the fact that if we don't address, Social Security and Medicare, that we will be crowding out the federal government spending on other very important investments, and yet there doesn't seem to be the urgency, at least at the federal level, to make the hard decisions to do this. I think these are part and parcel of the same conversation. I will admit that in my crowd of economists, we thought, well, we economists can sit down, we could different parts of that, we can work together to work out a solution to Social Security to help maintain that it's going to be solvent for many years going forward, without starting to make it part of the general revenues, which was where it would really be crowding out other spending. We could agree on some way to do it, but it involves very hard decisions and choices, and that is where our political process really becomes front and center, and this is where I'm going to bow out. I'm as mystified as any, but I do believe maybe necessity is the mother of invention. I think that was part of the discussion, that it will get addressed when it must be addressed. But that feels very inefficient from my point of view. If we were to address it earlier, we could do it at lower costs and by not having as big of an impact on any particular groups of people. So it would be wonderful for us to take this as the Fitch downgrade is just another reminder that we do need to get our fiscal house in order. It does require making hard choices, which requires compromise on both sides and really working together.
I'm going to go to some questions now. We'll bring a mic to you. Okay, let's start with you over there, sir.
Thank you. I'd like to follow up on your last question, allocation of resources. Our educational system is an abysmal failure. Not only is it an abysmal failure, we're now losing teachers, so we can't even catch up. I hear all this conversation about the economy, and I read stories about where we're going with schools, but I've never seen them linked. I don't understand how our country can have a conversation or figure out where we're going in the future if we don't fix the educational system. So is this something you talk about when you guys are here and other places? Because
Yes.
that's something like chips. If you get all on board and the country says we're going to fix the educational system, Poland and some other places, you fix the educational system. So how does this play out?
Rob, I'm going to go to you on this one because I know that you've given this a lot of thought recently. Now, we started a little late. Hopefully we can push a little bit past 2, but in the interest of getting a few more questions in, let's try and keep the answers crisp.
Well, first, you're right, and we did have a session on this very topic. In fact, the session was billed as worker training, which is something that I have a strong interest in, and it ended up being more about our public school system, early childhood education, but really K through 12, and really what happened in the pandemic, and how sadly so many of our kids are now behind substantially, and yet the school system is continuing to fail them by not catching them up, and that there is a dearth of teachers, and there's an interest, according to some of the data we had today, that maybe 35% of teachers are thinking about leaving the profession. This is bad. It's a tough topic to discuss because it's not a federal or state. It tends to be more a local issue. It's also an issue that's tied up with teachers' unions, which has become a very partisan issue, as you know. But we got to fix it. And if we don't, we will fall behind economically. We talked about economic competition with China as an example. They're graduating all kinds of STEM graduates, and many more than we are, not just engineers, but scientists of all stripes. And so our education system is misguided. The part that I feel really strongly about is that once a young person gets into the 9th, 10th, 11th, 12th grade, they should have access to skills training. And I think the federal government has played a bigger role in higher education than they have in skills training. As an example, Pell Grants. You can get a Pell Grant to go to college. You can't get a Pell Grant to get a short-term training program to become a certified welder or a machinist or a coder or a hospital tech. And those jobs are desperately needed. And yet we kind of push kids into the higher ed system. And when they graduate, I was an anthropology major. There were like 3 jobs in the country, I can tell you, I went through it. But, what we really need right now are these middle skills. And so our system is also failing there. I know that's not really your question, since your question is more public education system, which has huge problems. I will say one thing that I believe is that during the pandemic, private schools, parochial schools performed a lot better because they mostly stayed open. They figured out a way, if they couldn't stay open, to be able to stay in touch with the student and focus on learning. And to me, that was an indictment of our public school system overall. I'm not saying that all schools, some of the schools where your kids or grandkids went maybe did a better job at that, but that should have been a wake-up call to us, that there's something wrong here, and we're not giving these kids the opportunity to be able to succeed.
Okay, down here, please. The microphone coming, sorry. Yeah.
In his recent book, Peter Zian, who's a geopoliticist, seems to have hinged his sort of pessimistic view on the economy on the Bretton Woods agreement, which he said was disintegrated in the last few years, which is what was guaranteeing international trade. Could you clarify, is that true, that the international trade routes in these coming years are going to be more susceptible to piracy, and that the insurance companies will no longer insure them because there's no longer the American military looking after them? Is that real?
Does anybody have any strong
I
opinions?
don't really have any expertise in that, so I don't know the answer.
I didn't think that's what Bretton Woods was so much
Yes, I
about,
don't think
so
we can answer that question.
Yeah, I'm very sorry. I don't think any of us feel we can answer
I
that
wish we could,
authoritatively.
but I don't
Yeah.
know.
Greg,
Okay.
Thank you.
I will say, as a former U.S. trade representative who negotiated a lot of these agreements, we have fallen behind in terms of trade, and it's a conscious decision on our part not to engage in trade agreements for trade opening. And that's put us behind the rest of the world because they continue, our allies and countries like China, our adversaries, continued to make trade arrangements to lower the barriers to trade. And so I do think, I don't know if that's what he was getting at, but part of Bretton Woods was to have a system, was an international rules system. Some countries don't follow that, like China. We talked about the subsidization and the dumping earlier. But in general, what we have done as a country has been in a leadership role to encourage a rules-based system around the world for more trade. And our military does protect those trade routes, by the way. For people who don't think it's important for us to have a presence in Indo-Pacific, we basically keep, the Sea of Japan open and the Sea of China open, and we keep the straits open in the Middle East for oil. So I think the United States needs to re-engage in trade in a positive way, level playing field, understanding the good points that Cecilia made earlier about how there are uneven advantages and some disadvantages to certain groups, but we cannot step back from trade and allow the rest of the world to take advantage of these efficiencies when our economy will be weakened by that.
Thanks. The person standing in, yeah, right there. Thank you very much.
We educate people from all over the world, and now we no longer can accept them here. By and large, they're going to Canada. We talk about AI, economics. We talk about engineering and what we need. What are your ideas of your leadership working together with whomever to decouple this problem from immigration so that it doesn't get caught in the clog and we just come together? Can you help form a committee to talk to the people who need to be spoken to?
So actually, there are a lot of groups. So the Business Roundtable being one, and other groups that are very engaged with the government to try to look at the immigration policy and put it into buckets, right? So I have actually engaged with policymakers and legislators on this topic, and it is very frustrating, to be honest with you, because they tend to want to try to come up with some big grand agreement that addresses every element of immigration reform. And as a result, of course, then the partisan politics come in and it makes it impossible. Whereas I agree when it comes to high-skilled workers or high-skilled students and the need for us to continue to compete on the global scale in terms of advancing our technology and our industry and our capabilities, we have an amazing number of students from around the world who want to come here and work here. And instead, to the extent they are able to come, and I think they are starting to be able to come again after COVID, they're sent home after they finish. And so they're basically sent back to their home country to compete with us, as opposed to being able to bring them here and have them be part of the American dream. So we care deeply about it. There's a lot of business coalitions who go and talk to government officials about this. I keep asking, and every time I talk to them, I say, so what's the chance of some sort of immigration reform before the next election? And unfortunately, you get, on both sides, they say, well, we'd love to be able to do it, but, and then you end up hearing their partisan reasons as to why it's difficult. So it is frustrating, I agree with you. I wish I could answer. And it's intimate, I mean, it's incredibly solvable.
Yeah.
It's just, the question is if there's a will, there's a way, and unfortunately the will isn't there right now.
This was unfortunately a repeated theme of the last few days and today, which is that there are actually good, sensible solutions to these problems.
Very much so.
But we cannot seem to get the common ground in our political system to actually move those solutions forward. We're pretty much out of time, but I do want to finish, and I want to finish with the note that we started out. We have a terrifically strong labor market right now. For all the other problems, that is this great shining example of good news that we must not lose sight of. A 3.5% unemployment rate has been transformative for a lot of people in this country. I mean, a lot of the people who are traditionally left behind in our economy are people doing best. People with very few skills who don't have college degrees. Their wages are growing fastest. The unemployment rate for African Americans is the lowest in history. The gap with white workers is narrowing. But people with disabilities are actually getting job opportunities they never had before. So I think that this is one of the great things. And so to return to our theme of resilience, we're going to have a recession at some point. What is the single best idea each of you have to preserve and extend these gains for those parts of our society? And you have 30 seconds, lightning round, starting with you.
With me? Oh, I mean, I do think that we have to recognize the fact that the U.S. is an incredibly innovative, adaptable, and remarkably resilient society and economy. And so if we can embrace that and we have smart regulation, not over-regulation. We have smart engagement between public and private sectors to solve some of these bigger problems, but we also allow innovation to kind of push forward, because I think that'll actually drive, as I said, productivity, that drives growth, that drives opportunity, that continues exactly what you're asking.
Cecilia.
I would argue part of it is ensuring that our labor markets and our economy really are open to all people. So I think that has been being very aggressive on reducing barriers, whether it's discrimination or other barriers to the workplace. There's a debate in economics about how much we have monopsony, which is when monopoly is when there's like too few firms. Monopsony is when there's too few employers, or there are other ways. Occupational licensing is one way that you kind of keep people out of the labor force. Non-compete clauses, et cetera. And some of those exist not just among lawyers, but among lower skilled workers. So I would argue there's some of that. There's also ensuring sort of in the longer term that we have a stronger education system, that we have ways for even adults to reskill, whether it's apprenticeships, shorter term labor market skills. And finally, I would argue that we're moving towards more, if we're going to have a higher percentage of service workers, and those jobs need to be better paid, and we need to make sure we have the complements to working, whether that's strong child care, paid leave, so that more workers are able to balance both work and family care at the same time.
Rob, 30 seconds.
So both of my colleagues here did a great job talking about it, and Adena in particular gave the free market presentation that I will have on. Let's just be careful not to overregulate, because we kill the goose that lays the golden egg. Cecilia's an economist, and she did a great job. On the one hand, on the other hand,
exactly.
There's this story, probably apocryphal, of Harry Truman said, "Bring me a one-armed economist," because the economist kept coming into the Oval Office and saying, "On the one hand, on the other hand." But I guess what I would focus on is people who are still on the sidelines, because 3.5% is not an accurate number. Now, I say that because you have to be looking for work. And a lot of people aren't looking for work, and you may know some of them. And the opioid epidemic in this country has added to this. So 100,000 people are dying every year from opioids. But think of the millions of people who are unfortunately addicted and not looking for work. And so how do you get these people off the sidelines and into the job market? That's, I think, the next great challenge. And there are ways to do it. And in response to that gentleman's question, we talked about training a little bit. We didn't just scratch the surface, but Cecilia just talked about lifelong learning. I mean, there are jobs out there that are wanting. There are employers that are looking for people right now. They can't find the skills. And to skill these people up is possible. We had a presentation today, without getting into great detail, that was about some successes that the Business Roundtable was mentioned, but other companies around the country are using to take people who have given up, who really don't have a positive view of what their future might be, and giving them these basic skills. And then, sure enough, they get into the workforce. Once they get into the workforce, then their employer might pay to send them to college, might pay to send them to get reskilled. And so I think that's still where we as a country are not doing everything we can to engage everybody. And I look at the issue of people who have left the prison system. So these are folks who, made a mistake, and sometimes it's called second chance, sometimes it's third chance, fourth chance, fifth chance. But there's a great potential there. We have a growing group of people who are, formerly incarcerated, who are, many of them unfortunately have mental health or drug addiction issues. It's worth it addressing that for all the right reasons, for their potential in life, their God-given potential to be achieved, but also for our economy. We need those workers. And then finally would be immigration. We do have to figure that out. And it's not just about the visas for these students who are coming, who are going to Canada now, come instead of the United States, which is true. It's also, stapling that green card to their diploma when they get this STEM diploma, because we want them here. But we need workers at every level, and to have a legal immigration system that's regulated, not an illegal system that we have right now, but a legal one makes a lot of sense for our economy and our future.
Well, thank you very much. Terrific discussion. We have a wealth of ideas about how to make our economy more resilient. Rob, we need you to go back into the Senate to start implementing those ideas. All right?
Laundry
Thanks
list.
very much.